Everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 17th of November, 2017. Hope you had a good week of trading. The markets were a little bit volatile this week, but didn't finish off that badly. Nothing down more than about 0.5% besides the dollar and oil. But when we look at equities, we see that things were actually pretty decent. We had a shakeout earlier in the week, and this is the S&P 500 on a 65-minute chart. I've got a 30 period time frame, which equals 5 full days. As there are 390 days in a minute. But the volume weighted average price from the beginning of October, where we saw this gap, had been prior support in this area and then over in here again this week. So looking down to a 15-minute time frame, you can see a lot of choppy action. We closed right on that 5-day moving average, and the week to date volume weighted average price just below as well. So ideally next week we hold in this 257 and a half-ish area, but you know, on this intraday time frame, we're seeing that it's just become kind of some choppy range bound action more than anything. But when we look at the daily time frame with a 10, 20, and 50-day moving average, we had one close below the 20-day moving average this week, but the market quickly got back above that. Now, that was the first close below the 20-day moving average since late August, which made it significant. But we still have a rising 50-day moving average, which means we're going to continue to give the benefit of the doubt to the buyers overall and look at this market as just digesting the gains through a little bit of time and some volatility up here, which will reflect itself in the individual names and manage risk on each individual stock. The Nasdaq closed at a new all-time high on Thursday. We gave back a little bit of that today, but same story here. We're above, in this case, a 10, 20, and 50-day moving average, and of course every longer-term moving average is heading higher as well, indicating money continues to flow into the market. For this group, for the Nasdaq that is, we have been observing the volume-weighted average price from the gap right here in late October, and this general area has been finding buyers, as it did once again this week. Now, we get a little cautious when we're below declining 5-day moving average, but when we have an overall uptrend, there's no point in being bearish, but just cautious. So unless you're a scalper, there's really no business being short in this market. The short side just is not sticking. Next week, we'll want to see that 152 continues to hold up. I think that'll be an important level of support, that if we break below that, maybe we get a little bit deeper pullback. But traditionally, the week of Thanksgiving is a bullish one. We are closed next Thursday and a half a day on Friday. For the Russell 2000, interesting to see here that, again, a very important volume weighted average price level, which is the volume weighted average price from the August lows, is where we found the buyers here. A lot of people were looking for buyers at the 50-day moving average, but the volume weighted average price gives us not only time, but time from an event, from an important benchmark. It's anchored to a place where we have the average price from there based on volume, time, and price, so making it much more important than just a random 50 days. Now, 50 days is arguably random, but a lot of people use it on their charts, what makes it something that I look at as well. I did a little survey about that this week, and you can find that on my blog with this post. But right now, the Russell 2000 came right down to that to that volume weighted average price, and that's where the buyers took control. Now, it doesn't mean you buy there, not for me at least. It's an area to look at for evidence that the buyers have gained control. And when we broke back above the 5-day moving average, came down and tested it today, this really puts the buyers back in control. So next week, we're going to want to see that this Russell 2000 stays above 147 or so, and if it does, I think there's a strong chance that this group can continue up to new all-time highs. Semiconductors, here's another group that has just refused to go down for more than a day or two. We've seen these big red candles and have not become bearish because of a one-day candle. That's a foolish thing. We still have a rising 20-day moving average in here, which we're holding above, and of course the 50-day moving average we've been above all year, holding above that rising 50-day moving average, except for a few brief closes below it. But as I always say, it's more important is the direction of that 50-day moving average. In the case of the semiconductors, the real important level recently has been from this deeper pullback low right in here. So when we put excuse me, when we put a volume weighted average price off that low, you can see we have come down and found buyers in there. That is a key level. So next week we're going to want to see this market hold above 101.5 to 102. If it breaks below that, perhaps we see a little bit deeper pullback. That would also get us below the 20-day moving average. But again, there's nothing here indicating that that's what the market will do. We just have to be aware of these levels so that we can manage risk properly. The biotechs, as I've been mentioning, I thought they were going to come down to the year-to-date volume-weighted average price, anchored off of January 1st, and that's exactly where we found the buyers here this week. If you're not using these volume-weighted average price levels, I think you're trading blind, and it doesn't make any sense. So we're finding some buyers in there, but that doesn't change the fact that, we have this prior support in here, which is currently acting as resistance. The volume-weighted average price off the most recent peak is still up about 317. So sellers really are still in control. You've got to look at this as a bounce within a deep pullback that we just saw. As far as the financials, I had mentioned those this week. They came right down and found support at the volume weighted average price off the September lows, and they're trying to get back above, they're back above the 5-day moving average, but kind of stalled out in here a little bit today. I think that maybe next week you keep an eye on Bank of America, which this stock you can see came right down to the volume weighted average price from the September low. And now what's happening is the buyers are trying to gain back control, and in order to do that, I think it's going to need to get back above 27, because that's the average price paid from this peak right here. So the volume weighted average price from the peak shows us that the average price is now at about 27. So if the market, if this stock can get back above 27, maybe it does something like this, then it should be able to continue to move higher. Another name you might want to keep an eye on would be Abbott Labs Abt. On a weekly chart, you can see we're in a strong uptrend, and going down to the daily time frame, we've got a rising 50-day moving average. We've had some recent consolidation in here. So looking at a 60-minute time frame, we can say 65 rather, we can say that off the peak here, the volume weighted average price, the buyers have regained control. This resistance is now holding as support, and in order for the buyers to regain control of Abbott Labs, I think you probably need to see it clear Thursday's high. Stop for a swing trader would go somewhere underneath that 55.25, and then it's your job to continue to manage that risk and move your stop higher. These are the types of trades I identify for subscribers to Alphatrends every single day. If you haven't taken a look, feel free to come by and check it out. Thanks for your time.